How's it going, everyone? It's Sam. I am so excited to come to you today. My channel is My Financial Friend, but I am going to be joining TipRanks once a week looking at growth stocks and trending growth stocks. We are looking at a growth stock that is a strong buy, but is also mitigating your risk. Now, this is going to be a massive company. I'm sure everyone that has watched this is going to know the company that we are talking about here today. But on days like this, where all the indexes are down, it makes you realize that having a company that has good growth prospects, but is a little bit risk averse, is actually a great thing to add to a portfolio. Now, of course, I'm not a financial advisor. None of this is financial advice, but we are going to dig into the numbers. Now, if you guys don't mind just hitting the like button, I really appreciate that. If you see any tools here that you like, you can check out the description of the video and you can find that tool. Now, the company that we're looking at today is Disney. So Disney is a strong buy stock with 19 ratings, 16 buys, 3 holds. Is a 22.2% upside according to analysts. Now, on the low end, we're looking at $163. On the high end, $230. At this time, the price is $173. Now, looking at some risk factors, because I said it was risk averse, right? Number one, ability to sell. Number two, finance and corporate. So what does this mean exactly? Well, they say here, the number one reason that there's possibly some risk with ability to sell is misalignment with public and consumer tastes and preferences for entertainment and consumer products could negatively impact demand for our entertainment offerings and products and inversely affect the profitability of any business. Now, Disney, generally, a lot of people like their products, but that is always something you have to take into consideration. Now, in addition to that, we have the financing, right? They do have a significant amount of debt. However, they have started to pay this down recently. Now, what have insiders been doing? It's always important to take a look at what insiders are doing to see what is going on overall. Are they positive? Are they negative? So over the last 3 months, insiders have sold about $100 million. Now, a lot of this has been uninformative buys from different directors. The most significant sell is this informative sell from Robert Iger. So this was about 98.6 million last month. So that is a significant amount, obviously, compared to all these other buys, but most people have been buying. The price history, we had it before the pandemic around about $140. We saw it dip during the pandemic all the way down to about $92 and come all the way up to $197. Since then, it has come down about $20 to $172. People are expecting their earnings to come back. They were negative for several quarters here. Pre-pandemic, they had earnings per share between $1 and $2 a quarter. Now they're expecting about 55 cents for their August 11 earnings report. We also know that they are coming back with their parks. They're becoming more profitable as time goes on because they have their parks coming back. And what people are really excited about is their streaming. We saw them add a lot of users since the pandemic. From Q1 of 2020, we had 26.5 million subscribers. Then it went up to 33.5, then to 50, all the way up to 103.6 million in Q2 of 2021. They were only looking to get to 60 to 90 million subscribers by 2024, and they crushed that, hitting it within the first year. They still do not have their dividend back, so they cut this during the pandemic. They did say that they were looking to reinstate this, but a lot of people think that it would make more sense for them to put this money towards streaming. So right now, Disney is sitting at an interesting point where a lot of people see it as a reopening play with the parks, but a lot of people also see it as a great play if the parks don't reopen and if the economy doesn't get back to normal, because of the fact that they are focused on streaming. So people have to stay inside. Sure, they're not going to the parks, but they might be signing up for Disney Plus and becoming a long-time subscriber. So this is why it's such an interesting company right now. It's kind of sitting on the fence where it's a reopening play and not a reopening play at the same time. So there are a couple things that investors are looking for in their upcoming earnings report. Number one, is if they can beat this earnings per share of 55 cents. Last quarter, they actually beat pretty significantly, reporting 49 cents per share instead of the analyst estimate of 27 cents. The other thing people will be looking for, investors will be looking for, is whether they are looking to reinstate their dividend. And then possibly the most important thing to look at is their growth in subscriber numbers. So will they continue this growth of adding subscribers to Disney Plus? Now recently you can see there was a decline in the rate of which people were adding Disney Plus. We saw about 20 million new subscribers between Q4 of 2020 and Q1 of 2021, but then we only saw about 9 million new subscribers from Q1 to Q2. Now, weather is getting better here in America, so that makes sense. Over time, they will most likely be increasing the price of Disney Plus too, and there are just more people that wanted Disney that already have it, right? There are only so many people in the world that like Disney, so that is something to consider too, that growth will slow down over time. But you can really see this S-curve here, right? Where it's starting to taper off a little bit. Now, what are we going to see in the future? Only time will tell. We are really looking forward to that upcoming earnings report. Now, of course, there are always risks. I'm not a financial advisor, so you have to do your own research, but definitely check out the tools below to TipRanks so that you can try out the platform and see what you like using. Thank you guys so much for watching this video. Thank you for hitting the like button and hitting subscribe down below. We're on the road to 25,000 subscribers on TipRanks, so definitely hit that subscribe button to get more weekly videos, more daily videos on the stock market. Thank you guys so much. My name is Sam from My Financial Friend. You can check out my channel down below, and I will see you in the next video. Bye.